$3.4 billion worth of crypto is going to hit the marketplace on this new story about FTX coming to a ruling which will allow them to liquidate certain assets. Now, we know there's a bit of a limitation on how much they can actually sell off into the crypto space, but it's like looking into the future and then saying, well, we know that 3.4 billion is going to get wiped off cryptocurrency. Is that a good thing? Is it a bad thing? How much of it is Bitcoin? How much of it is Binance? How much of it is ETH? We don't know what the actual amount is, but how much of an impact is it going to have in the crypto space? Well, ladies and gentlemen, we've got more pressing issues, all right? I am the bearer of bad news, but I can also bring good news. The good news is that the markets are always going to be open. The bad news is some heavyweights on Wall Street are still calling for that nasty stock market crash. It must happen. Assets across the board are just so overvalued right now. They are in the same level as they were in the dot-com boom, and they're kind of concerned that people are just ignoring the signs. Well, we're going to be diving into the charts in a minute, guys, and we're going to be looking at certain stocks that are, in essence, bucking the trend. We're going to dive into a bit of Forex, and we're also going to pay attention to Bitcoin. You know, Bitcoin, no one's interested in it. You know, I checked out some Google Trends, and Bitcoin, no one cares about it. Bitcoin is all about being fashionable, right? When it's moving, people talk about it. When it's not moving, no one talks about it. But legacy markets like NASDAQ, Forex, you name it, commodities, gold, those bad boys are always in the papers because people are actively trading them all the time. So, ladies and gentlemen, I haven't forgotten either. I've got these bad boys to give away. Now, I know there's a little bit of a thing going on the website where you guys might want to change your usernames because I said it's got to match YouTube. Just become a member on the channel, a bronze member. And if you do win, we will work something out if your YouTube name doesn't match. But don't worry about that, ladies and gentlemen. We'll be getting into that in a short moment. So let's get with what you guys need to know this week because it's going to be an explosive week. And I'm serious, man. The markets are going to move rough. So let's get with the flavor, guys. All right, then. So you can clearly see that I'm not there. Now you see me. What is good, ladies and gentlemen? I hope everyone is doing well. What's good, Pozo? Do I wear slim tees? No. No, they have to be baggy. You know, I'm not down with the slim tees, man. Nah. What else is this? Who else is here? Victoria, Jay's Way, what's good? Flex, Rave, Jonah, what is good? Prosper, how we doing? Mo Biggs, what's happening? Checking in with you all. Crypto Girl, Alvi, Medina, Junaid, Neon, what's happening? Yes, top prize equals a dozen eggs. Still expensive. But let's get with the flavor, ladies and gentlemen. Bitcoin ain't going nowhere. All right? Still not going. And this is keeping people optimistic. Right? The fact that Bitcoin hasn't gone lower. It's moved up, it's moved down, but it hasn't gone anywhere. And this is now creating speculation across the board. Could it go lower? What if it comes down a little bit more before it goes back up? What reason do we have to believe that Bitcoin's going to go back up? Because we need to come away from the idea of value, right? Come away from the idea of what price it must be. We know in the charts we've got bag loads of liquidity on the monthly. Look at this. These are all liquidation points. You've got liquidity currently at the 28,500 zone. Let me just change this bad boy to max liquidity. And what we got on the monthly time frame is at 28,500. You've got $16 billion worth of short liquidations. Below, in the very close price proximity of 25,100, you've got 14 billion. And then we've also got this 23,500 zone with 17 billion. And then down at 20,900, we've got $16 billion worth of long liquidations. These guys are holding on to dear life. Someone has to come out with news about cryptocurrency to suggest that things are looking promising, okay? And in a short few moments, I'm going to be talking about this FTX story. Now, that story itself, tell me something new. Again, negative news for cryptocurrency. And this is the thing about cryptocurrency. You can't push them off. You can't push the guys in cryptocurrency away from the idea of it. Okay, I've read about articles talking about on the 20th of September, something crazy is going to happen where the US Federal Reserve is going to turn around and say to everyone that you have to be careful because we're now converting any money in your bank account into digital dollars. Like, it's all designed to get people to do something, all right? Now, the best way to avoid all this madness of news that comes out, we need to focus on the news. And you may have heard me in the past say, I don't care about news. We are in a macro-driven environment, okay? Because everything is going to the pan. NASDAQ, over 30% in value in stocks. They need to come back down, okay? You've got the US debt ceiling causing a problem, and in the next month or so, they're going to start knocking on the door about how the US is going to keep on maintaining its payments, and I ain't even going to talk about China. Only last night, we had some activity in the markets because yen and comments by Biden on Taiwan, because they're going to try and start an invasion, okay? And then Ueda on wage growth. They had to smack the interest rates and lift them for the Japanese yen because it's not sustainable anymore. Now, this is very important for anybody that's trading Forex. It does serve you to pay attention to the Japanese yen, okay? So here we have the Japanese yen. They've had negative rates of return, all right? And that doesn't really encourage investors to do anything but go to the US dollar, okay? Now, if we look at the Japanese yen, we can see it started to move up. Now it started to come back down again, all right? This bad boy can't be strong. It doesn't serve them to have a strong yen. But things are starting to crumble for the Japanese yen right now, and the Chinese as well. Their economies are slowing down, all right? Now, China needs to encourage investment. You've got the Countryside Investment Company that is effectively asking for an extension so that they can maintain these payments that are due, but they look like they're going to be missing those payments, and things are starting to crumble, and China needs to engage in stimulus. They need to get the stimulus going to encourage investors to start putting money in China. But when you have got dollar showing returns of 4.9% on the yields on a 2-year bond, and then you've got the 10-year bond showing exactly 4.2% on the 10-year, you're thinking to yourself, why am I going to go put my money anywhere else other than the US dollar? Okay? Now, this is all part and parcel to help you understand how and why Bitcoin is potentially gearing up to go lower. Okay? Dollar dominance. We've seen the smackdown. There's a bit of a gap in sight, but this is a nice correction for the dollar. It needs to drop down, because we've been going up non-stop. But dollar has been doing this for quite some time now, and it sets itself up. If you just look at the waves of behavior of when investors load up on dollar and when they come away from dollar, it kind of gives you insight into really what is going on right now in the marketplace. When dollar rises, people are sitting predominantly in cash. When it drops, people are exchanging dollars for more lucrative assets such as the euro. Now, you can see euro itself is starting to bring some flavor into the chart, and it's holding out inside of this range. The idea is, of course, when dollar goes down, euro goes up. But we have got a very tricky week ahead of us, ladies and gentlemen, and this is going to be the nail in the coffin to determine exactly if this rally to the upside for the NASDAQ is going to be sustained, okay? Volume has dropped in terms of the NASDAQ. I'm not seeing volume coming in to prove that they're buying stocks, okay? Now, don't get it twisted. There are some stocks that have made some moves, all right? Now, if you're coming here for the first time, or all my guys that have been with me for a while, you'll notice I'm starting to talk more about the Forex markets, NASDAQ, S&P, the dominance of the dollar, stocks itself, and cryptocurrency. Why? Because Bitcoin ain't moving. So you need to have another avenue where you can go and exploit the volatility. And that's where the legacy markets come into play. But the legacy markets, in my opinion, are going to dictate what happens in cryptocurrency. Not FTX. FTX itself is just another release of liquidity into the marketplace. That is it. Surprise, surprise. It ain't going to be the first time someone sold $3.4 billion worth of cryptocurrency. Look what SpaceX did, and they wiped out their cryptocurrency portfolio. Done. All right? So there's no surprise there. But what's important is if we follow what's going on in the bigger picture of the main markets, we're going to then understand if Bitcoin does have a chance to move up or down. Frankly, if FTX scandal and all this $3.4 billion worth of crypto assets needs to be liquidated, they ain't going to do it when it's dropping. Mm-mm. They ain't doing it when it's dropping. They're going to wait for it to pump up. And we're just going to need a little bit of information that would suggest that maybe some positive news in cryptocurrency comes in. Even with Visa, Solana, and all of that, people are like, give me a reason to buy. They get the reason given. And then they become the sell liquidity. And then they smack it back down again. So it's euphoria all the time in cryptocurrency. That's the problem with crypto. You can't be euphoric in the NASDAQ. You can't be euphoric in Forex. You can't be euphoric in commodities because it's just places where you can move money. Okay? If you're starting to feel a little bit concerned about things, then you go put your money in oil. Why? Because oil will always be consumed across the board. Now, if you go over to oil itself, you can see oil is starting to climb up. All right? Now, this is only because the Saudis have actually cut the cap on oil and then reducing the amount of oil available around the world. That's naturally going to increase the prices, but it can also squeeze economies. And that's going to be forcing the US into a bit of a situation because if the cost of oil is going up, then that's going to impact the economy. And with 5.5% interest rates, we're going to see a little bit of a problem, which leads me over to the next topic at hand, ladies and gentlemen. Inflation. You have until today, tomorrow, to pretty much exploit any market moves. Wednesday is a day I'm staying away from the markets before 1:30 UK time, 8:30 a.m. Eastern Standard. Why? Because I'm not going to get caught out in any trades whilst they're getting ready to tell us that inflation is either going to be up or down. They're already projecting inflation to go up. Word on the street is suggesting that they could actually found the base for inflation right now, and that 3.6 is the, well, 3.2 is the base. 2% ain't going to be achieved. The Federal Reserve will need to smack interest rates significantly higher. Wall Street heavyweights are calling for it. We're all getting all messed up with a 5.5% interest rate increase, right? These guys are talking about 10, 15%. Do you understand what will happen if that's going to be the case? Because it wouldn't be anything new. You only need to go back. I've got a chart to the right of me, left, right, over there. That gives me the last 100 years of the US stock market. Alongside that, the federal funds rate. And every peak on the interest rates, it's gone up 15%, 10, 11. There's always a market move. That's when the Fed pivots, okay? So luckily this time round, the information that's coming out this week is going to pretty much dictate what happens next week. Because next week, we've got that federal funds rate, FOMC economic projections, and we got that boring brer, Mr. Jerome Powell, diverting questions continuously. We're going to be setting that bad boy up for the FOMC press conference. And we're going to be hearing exactly what their plan is. They're talking about holding the rates, but with the way things are going and oil starting to climb up, that's going to be a problem for the economy overall. We only need to hear about the manufacturing index to come in lower again, suggesting that companies ain't doing business. And then they have high loans to service. Because remember, corporate debt before the increases on interest rates was really cheap. Now we're going to get it refinanced, which is why you've got guys all talking about a drop in the marketplace. Okay? This article goes on to say that there's too much enthusiasm on the rate pause. People are happy that they're pausing the rates, but they're coming away from the important factor that interest rates are still high. That means companies are going to have to service this. The only players that are going to win in this game are the banks because they're the end result. They're the ones that have loaned out the money, and you need to pay the banker back. Bankers, man. This is the story that I'm talking about with FTX, okay? Now, we've got effectively 2 days until they actually come to the ruling as to whether or not they're going to release this liquidity. Now, they are subject to only releasing around 200K, mad love, zigzag, 200K in positions as such. But the fact that we already know this, what do you think people are going to do in cryptocurrency? They're going to be like, yeah, let's do it. Let's buy up. Everything's cheaper now. Cool. All right. But if you're going to play that DCA game, ladies and gentlemen, you got to be very careful. Okay. Because this week, we're probably going to get 2 bouts of volatility. We're going to get this agreement about the ruling of this FTX sell-off. We're also going to get the CPI data which is on Wednesday, which happens to be the same day that the ruling needs to be finalized. What a coincidence. On top of that, we've got, of course, the core PPI coming out and unemployment claims. And if unemployment claims comes in any lower than 216 and they're projecting for it to be higher, we've got a big problem. Big problem. Because it just shows resilience in the marketplace. The same story with what's going on in Japan, all right? Wage growth is creating demand, all right? Same problem that we've got in the US. People are working, wages are going up. It's not a good sign. Some of you might beg to differ with that. But based on the data that they present us, and as a trader, I have to refer to this data and say, okay, if I've got CPI data coming out on Wednesday, what am I going to do beforehand? Well, I'm going to pay close attention to how the dollar's doing. I'm not going to look at any on-chain analytics. I'm not going to do anything like that. Why? Because I think we're past the phase of on-chain analytics about cryptocurrency. Hear me out. Hear me out. It's about what happens in the bigger markets rather than what's going on in the small pond of cryptocurrency. Now, that's me not talking negative. That's me talking realistic right now. Go into the total market cap for cryptocurrency. We are literally sat at a measly $1 trillion, okay? Then you've got bad boys like NVIDIA, Apple, Amazon, Google. These guys are just dwarfing cryptocurrency market cap. And it looks like it's just continuously going down. It's a slow bleed. We need cryptocurrency to get to a point where it really grabs interest because no one's talking about it. Now, if you're already in positions or you're looking to buy more cryptocurrency and you're thinking, Tino, forget you, bro. You know, you're talking a lot of air right now. Cryptocurrency is the future. It probably is the future, but we're not in the future. How long is it going to be before we get to the future? So when we look at the daily time frame on BTC, we're then going to say to ourselves, okay, Bitcoin, don't be surprised because I've been saying if Bitcoin clears this 24,827 zone, it's yippee-ki-yay to the downside because there's enough reasons down here, $165 billion reasons as to why Bitcoin will likely hit this range very soon. Why? Because there's liquidity there. There's no reason for them to buy it. And this commitment here, news play up, bring it down. Vector recovery, roll over. Trends are rolling. We're getting the death cross, ladies and gentlemen. That's coming into play very soon. You know? We had the golden cross not so long ago. What happened with that bad boy? That flopped. But Bitcoin really hasn't gone anywhere. So if you're going to set yourself up for future volatility, okay, by the course of the hybrid system, you've got to say, well, this is the next zone of liquidity for Bitcoin, okay? You have to mark off 24,121. Down here, you got 20,392, okay? People will be tested. They don't think it will ever go to certain points, but never say never in the marketplace. Never say never, because the same way Bitcoin could never get above 100 is the same way it went to 65K, okay? Have no conviction. Have no bias. Just look at what the chart says to you. It says to you things are rolling over. But Bitcoin's holding out very well. So you're then left with the question, well, what if it goes up, Tino? Okay. What reason would Bitcoin move up? Someone big would have to declare they're buying crypto. Something big would have to happen in crypto. ETF. Well, we got 240 days because we've got to wait for the SEC to pull their finger out and determine whether or not they should allow the ETF to come into play. And lots of speculation about people wanting to put an application for an ETF. It's irrelevant. The only one I'm paying attention to is BlackRock. And if BlackRock can't get the ETF sorted out, then where are we going to get the liquidity from? Excuse me. That's what's on my mind. Now, from a price action perspective, ladies and gentlemen, Bitcoin... Look, the liquidity is there for them to grab. They haven't actually done anything over these last few weeks, and a lot of people will see this as a good sign. Excuse me. That's the problem we've got, because people are going to look back and they're going to say, well, back in December 20, that's when Bitcoin started to move up. They're going to think the same thing over here. We're not in that same time frame, ladies and gentlemen. We didn't have yield inversions over here. You know? We just come from what appeared to be COVID, all right? And all of that scare and everything shut up from that point, okay? So, which is why I suggest to you all, if you're going to start doing DCA with Bitcoin, given the way Bitcoin is moving, any opportunity that you realize a return, take it. There's no point in leaving your money in there. Because if Bitcoin is going to keep on dropping, you buy Bitcoin now and it doesn't go up and it keeps on dropping, you're going to wish that you waited a little bit. Welcome to the game of trading. Shoulda, woulda, coulda, but you didn't. You know? That's the truth that we're in right now. Lots of pattern watchers, lots of trend following traders, you know, all the guys are marking off what's going on inside of this zone with Bitcoin. Is it going to break a wedge? Is it going to break a flag? Is it going to do all sorts of stuff? Like, look, quite frankly, ladies and gentlemen, the game's not designed for you to win. The game's designed for you to commit liquidity. The second you commit liquidity, market makers winning. Now, how long you leave that liquidity exposed is a different game, okay? And you'll end up losing if you keep it in there for too long and you're not realizing a return. We have a golden rule with the hybrid system that says, if you're a day trader and you've opened a trade and you haven't realized a return within 2 hours, that means you're not in the right trend. You're not in the right trade, okay? Because realistically, if you've purchased at a certain point and you're not grabbing the momentum and price ain't going anywhere, you don't have to be losing to close the trade. You could be at a middle point like this with Bitcoin and it stays in this range, within a $10 range for the next hour and 15 minutes. You could have gone to another asset and took advantage of it. So within 2 hours, close the trade if it hasn't realized a return. Usually, when you play by that rule, you're going to be more conscious of how long you're going to stay in a trade for. You're going to be conscious of how long you keep your money exposed for. It doesn't mean that you have to keep it open for the 2 hours. How likely are you going to get a return within that window? And if you do get a return in that window and it's 10 minutes in, you've caught the bulk of the move, okay? Take the money, start again, reset the golden clock, for the better word, okay? Hope that makes sense. Bookmap. Where's the liquidity gone, guys? Look, there's nothing here. It's frustrating. It's all down below. Look, $450, 450 Bitcoin orders at 25,500. And if you remember last week, we were talking about that 25K zone. What's going on down there? I keep on going down and we've got some algorithm placing orders and canceling them. And we've got nothing now at the 25,000. Well, we've got 440 Bitcoin orders at 25,000. So last week it was 800 and it's been open and closed. Look, if you can see that little gap right there? They've been placing the orders and canceling them. Now remember, these are limit orders on the right, next to this white line right here. On the right side, these are limit orders that haven't been filled yet. The ones to the left are assumed orders that have been filled and canceled at the same time. It's what we call spoofs, how the market likes to manipulate traders. We can see that we got a big sell wall at 25,740 with 250 Bitcoin orders, and Bitcoin's rejecting that VWAP. Okay, now the markets are due to open and they are going to be reacting to the response of what was done last night with the G20 meeting. So we're going to see some big volatility coming into play. Lots of limit buys are being placed down below at 25,380. Now, we've witnessed Bitcoin spike lower to go up and come back into the range. Look at the psychological levels. They're flat. They're not going anywhere. And this is just either accumulation or distribution. Okay? Now, the best way for us to work out if Bitcoin is going to move and how long and where, you've got to go to the stock market because that's the only thing that's going to be moving right now, the stock market, okay? Now, they're calling for the crash. Look, why haven't stocks tanked in August and why they have tanked in August and what Wall Street expects next to happen. So August is literally one of the months historically where the market doesn't perform so well, okay? You can see that. We don't have that much volume coming into play. The actual trend of the actual market is under pressure. We've got a buildup of distribution days is when the market's selling off. And we've got a few stocks that could be making some moves. Check this out. So, Oracle, this bad boy, tipped a gap up at the open, all right? Currently trading at 127 on the open pre-market. It's moving out with the potential to break even higher. Now, this is for my stock guys, okay? And you can see that they've come from what appears to be some long accumulation. Some of you guys might understand it as the good old cup with handle. You know, pioneered by Mr. William J. O'Neill. God rest his soul. He just recently passed away. Bam. Brookfield Asset Management, another financial company, trending nicely upwards, expected to break out to try and take out the $35.50 zone. Okay? In that formation, look at it. You've got a pattern here. Some of you might see it as the cup with handle. That looks like a pretty much good little cup with handle right there. Pattern watchers would see it as what? We would see it as rise, retrace, continuation. Gapping up at the pre-markets towards 35.27. So we're going to anticipate some more flavor right there. Activision, to all my gamers out there, look at this bad boy right here. Big move. Gap ups, gap down. We've got flavor in Activision. This move here could continue. But if we look historically, you can see what goes on. They gap up, they gap down. It's a very volatile asset. Okay, so keep an eye out on Activision. Next asset. Now, this is a big one, big market cap, getting ready to try and break out. ServiceNow also trying to make the move. Now, the problem that I've got, guys, is in relation to cryptocurrency and the overall marketplace, if I'm not seeing the big boys move in, that means Tesla, that means NVIDIA, that means Microsoft, that means AMC, maybe not so much AMC, but Google. Google's probably the only one that's actually showing promise with the structure that it's currently got. But heavyweights like NVIDIA right now, they look like they're struggling, okay? They've been taking every vector zone back except for the exception of this bad boy right here. However, we've got a gap up, but it's still trading below the 50 EMA. And we've got the gap cleared down here. So we're going to be very cautious with NVIDIA because we do have this point of interest down here, which could be a bit of a problem for us on NVIDIA down to $411 a share, okay? Remember, if oil keeps on climbing up, investors are going to commodities. That means you're going to see oil climbing, you're going to see gold climbing, okay? So just be mindful of that. If they're seeking commodities, they are concerned about the way things are ending up. That logically will tell us that they're going to take money out of stocks, that they're going to take money out of certain Forex pairs, put it into dollar. And then, of course, the yields themselves are going to be looking to climb higher. The bonds market is going to start rolling over. We've already had a gap down at the open anyway. So that's a bit of a problem in terms of sentiment. But like I said, keeping a close eye on the Japanese yen, because the higher this goes, the lower dollar goes. Okay? And that means you long all assets against the US dollar. That means euro. That means pound. Okay? That means Aussie dollar. You long everything as long as yen goes up. Now, we've got this area right here on the Japanese yen that could pose an interesting point on the back of the dollar. So if yen keeps on moving up and they've got to make the market start to show interest in Japan and China, they'll be coming back into this zone, which means the strength of the dollar could end up rolling over. But we have that problem. CPI data, which could piss on the fire and send everything back down again. So keep an eye out on that. Now, the market is about to open, or it is open. Let's just have a look at where we are in terms of liquidity for the marketplace. Right now, we've seen a buildup of volume coming in on the futures markets. I'm looking over from 10:30 this morning. I've seen a lot of liquidity on Ethereum, and I've seen it on Bitcoin. Lots of Ethereum being sold right now. We've got 309 million on the short side of Ethereum at 10:30 this morning. And then, of course, a few minutes later, 4 minutes later, they've done another 353 million. And then we're going even more. Bitcoin did a bit of a sell-off at 145 million, but now it's starting to wear off. We got 192 million now. Well, 23 minutes past 11. So not much has happened in terms of big volume in between Bitcoin and Ethereum in this past hour. We're looking at 11:30, 12:30 right now. Still nothing's going on. We go into the chart itself of Bitcoin just to understand where we are. What I'm going to do right now is just navigate the marketplace. So if I'm talking to myself, then what I'm doing right now is breaking down the ranges. So Bitcoin still below the 50 EMA on the 1 hour time frame. Red vector candle zone. Be consistent with a stop run up back into that zone. We want to see the daily open, but is it enough to really encourage investors to step in? We would logically anticipate a test of that zone. Quickly going into the 5-minute time frame should give us a little bit of a flavorsome move up. Let me just go over to the NASDAQ and the S&P. Let me just have a look at the profile. Yeah, NASDAQ is currently trading at its value area high. Look at how fast this mother trucker is working at. You got to be very careful when you're trading NASDAQ, especially at this time of day. What have we got? This is the tick chart, 2,584 ticks. And we can see we're trading below the start of a new VWAP itself. NASDAQ is making a big move up. Bitcoin on the left side of the chart right here, as you can see. We've got the profile showing that Bitcoin hasn't gone back into the point of control. This is the 25-day chart. And the point of control sits at 8,500. The logic would suggest that we would expect Bitcoin to come and test that point, but expect resistances to come into play at 25.8. Why? Because we're assuming that that's an area that they sold from, okay? So we go into the chart and we look at where 25.8 could lead us to, and that's towards the daily open. Bring that bad boy back up. And the open itself in the marketplace here, it says at 25,921. I'm paying close attention to this because Bitcoin's moved away from its value area low, which is consistent with reversals. Okay, so keep an eye out on this range. Ideally, these 2 points in the chart between 25,800 and 25,825, there are 2 big points in this current structure because that's where most of the contracts are being exchanged. Now, we're going to know shortly if 25.8 is an area of resistance, because then we'll understand that at that point of control, most of the sellers were engaged at that point, okay? So we would assume that if they can clear that range of 25.8, that means taking the daily open, logic would suggest that we expect higher movement to potentially come and give us a stop run to the upside to effectively come back into these vector candle zones. What would invalidate that? Bitcoin needs to break beyond the 25,577 zone. That, in essence, is how you break down the chart. You can make it as complex as you want. You can draw as many lines as you want. But the logic would say the easier you make this, the less of a decision you have to make when it goes against you. Okay? Has it broken that zone? Nope. Everything is favorable to the upside. That's the logic. What have I got in front of me? I've got a daily open that they seem to not like to react from. I'm going to see if price can get towards that point. Why? Because that's where they sold from. That's where the reaction is. Zoom out. What do we see? Well, we see that the psychological range is all over the spot. They like to sell from the psychological high, and they usually like to buy from below the psychological low. Principle has it that we're in exactly that same story right now. Okay? And ultimately, you've got to take the risk. Don't come to the game of trading if you're not prepared to pay the game. Simple. You can't come with the idea that you can't lose. You have to lose. Because how are you going to make any money on the back of someone else not losing? That's what this game's about. You know? Just before I let you go. Yes, these 2 hats, they are due to be given away. Tomorrow's live stream, I'm going to be doing the giveaway. The pattern watchers, snapbacks. I'm hearing a lot of people are liking this, and I'm going to do it again. I'm going to do different versions of it. And the best way for you to take advantage of this is to make your way over to the Traders Reality website and become a bronze member. Okay? Now, I know you guys, there's already guys at platinum and gold and silver membership. Don't worry. I got you guys covered. I got something for you guys. But this is for the guys in the YouTube channel. All right? Become a bronze member and you'll be able to partake in winning one of these bad boys. You have to do it, not in this video, in the last video where I do the giveaway. All right? That was Friday's video. Okay? So, ladies and gentlemen, mad love and respect. I've given you the flavor. I hope I haven't pissed anyone off talking negatively about cryptocurrency. That's the truth, man. You're either going to hold on to your dear life and hope that Diamond Hands is going to get you through it. Maybe it will get you through it, but we need it to happen now. And the way crypto's going, man, it's slapping it left, right, and center. They're not really giving us the best thing in crypto. So any opportunities you get to make money, take it out of the market, start again. All right? That way you're not being bullied off by Mr. Market Maker. All right? Ladies and gentlemen, mad love and respect. Welcome back to Monday. We've got a busy week ahead. Take care of yourselves, gang. Peace.